Need an investment strategy. So that is the topic of today's live. Now, before you tell me, oh, Bella, that sounds hard, it sounds complicated, it really isn't. So when I am saying you need an investment strategy, it really just means you need to invest with a purpose. So before we go into today's conversation, let's take a few steps back to talk about what this actually means and why we need to start thinking like this as an investor. So most people are kind of freestyling their investments. They are just buying stocks. I hate to say it, just like willy nilly, right? So they're buying stocks based on name recognition. They're buying stocks because they saw something on the news or social media, or they may have received a tip from a family member, coworker, or neighbor. And so they're just making these investments without really thinking about the why. And more importantly, should they actually make the investment? And so I did post the video on my Instagram earlier today, or was it yesterday, where I kind of gave 3 tips. And I guess I'll share those first before we go into the whole investment strategy conversation. So, the first thing when it comes to investing, you never want to invest in anything that you yourself do not understand. We kind of discussed this a few weeks ago, but that is so crucial to be successful as an investor. Now, you, of course, don't know everything as an investor, and neither do I. But you never should invest in anything blindly. You want to take the time to understand at least a little bit to get some context, understand if that investment makes sense for you. Unfortunately, people tend to just invest in things blindly and they kind of hoping for the best. That's tip number one. Tip number two, you want to make sure you are checking on your investments on a regular basis, and that is so important. We also discussed this a few weeks ago. You ideally want to check on your money, I would say once a month, if not more than that, but at a minimum once a quarter. You log into your 401k, your IRA, your portfolio to see what is going on with my money. Is it doing well? Is it not doing well? Should I invest more? Should I invest less? You want to have some understanding of what's going on again with your money. And the third thing is you want to make sure you are being consistent with your investments. It's not always about how much you're investing. It kind of comes down to, can you do this consistently, right? So real wealth is built over time. It doesn't happen overnight. So you can't try to get rich quick, because it doesn't happen that way. Unless you win the lottery, getting rich quickly is really a rarity. You have to be willing to be in this for the long haul. And so you think about those 3 things, nowhere in there am I telling you to not invest at all, but it comes down to being consistent, understanding what you're doing, and checking on your money on a regular basis. Now, when it comes to your strategy, this is the part that tends to intimidate most people. And I promise you, it's not hard, it's not complicated. Again, I've mentioned this before. You can make investing as simple or as complicated as you want it to be, right? This is your money. This is your journey. And your journey is going to change over time too, right? That's the other part we have to kind of understand when it comes to investing. Things change over time. You might be in a place where you can invest more money. You might find yourself later where you have to scale back because you have other financial commitments and responsibilities. So when it comes to money, you have to be really fluid with your thoughts and your approach to it, because it's never going to look the same depending upon the season that you are in. So let's talk about this investment strategy. Now, again, these are just suggestions. They are not the be all end all, but I really want you to start thinking before you make your investment versus make the investment and then have regret later, or then you're trying to figure it out after the fact. We want to be more intentional with our investments so we feel good about what we are doing with our resources. So the first strategy is, I like to call a growth strategy. And so this is where you are investing in assets that you think will grow substantially over a long period of time. Now, again, this may require some research on your behalf to understand the mechanics. Let me not say mechanics, that sounds kind of technical, but you want to understand what you're investing. Now, today's topic, we're going to focus on the stock market specifically, but it's can kind of apply to other asset classes as well, real estate, crypto, etc. But we're focusing on stocks specifically, since most people are invested in the stock market either directly or indirectly. So when you think about growth strategy, this is where you're going to invest in companies where you see potential. You see that there is a need, there is a demand for their products either now or there will be in the future. So one good example, well, 2 examples I'll talk about today are alternative energy and artificial intelligence. right? Thinking back like 5 years ago, these are industries, particularly AI, where people weren't really focused on it because it really wasn't as mainstream as it is becoming today. But now AI is at that point where it is becoming part of mainstream conversation. More and more companies are looking to implement AI in how they run their businesses, how they engage with customers, and sometimes how their employees are able to conduct their day to day operations and responsibilities as well. And so you are now going to see, and we have seen, more of a demand for artificial services and the systems that kind of support that technology. So this might be a great time for you to consider investing in companies that either are in AI directly or they supply the resources and systems or even the materials to support AI. And so again, you want to do some research to understand the company, how they work, and all of that. But this is an industry that we know is growing. Whether now I know there's a very diverse conversation or diverse opinion when it comes to AI. Some people love it, some people hate it, some people are kind of in between, they're not sure how they feel about it, but it is not going anywhere. It is going to change how we all operate our day-to-day lives, whether it comes to how we work, how we just do things for leisure and everything else in between. And so there's no getting away from it. So maybe this is a time to figure out, well, how do I make some money off of AI if it's not going anywhere, right? So this is an industry where there's a lot of growth potential and there has been a lot of growth. So this is where you would say, okay, well, I want to invest in this industry or this company because I see the potential. Now, of course, as an investor, it does require you to have some forethought, and it requires you to put some, again, thought and intention behind this decision. And this is just one example. I'm sure there's many more you could think of after watching this live or replay. But this is one way to have a strategy behind how you are investing. You're not just picking things arbitrarily. You're putting some intention, and you're trying to decide why and then the how. So you see how this is going? So again, this doesn't require you to have fancy charts and do hours of research, but it does require you to put some thought and even just look at what's going on in the world around you and in the world around us. So this is how I want you to start thinking as an investor. Look at what's going on around you, whether it's mainstream media, mainstream news, in your everyday life, and see where is the potential. Where is the money going? Where is the money going to be? And that is how you will start to make some progress in your investing journey. So the next strategy is, which is one of my personal favorites, is income strategy. So this is where you want to invest in stocks that are going to bring you an income, i.e. dividends. And so this is relatively simple in a sense, because you can just look up to see which companies pay dividends and then from there decide which ones you want to invest in, whether you want to invest in a certain industry, in a certain company, or you can invest in an index fund, right, that is in that industry or that has companies in it that pays dividends. So one good example is a index fund called FDVV. This is a high dividend index from Fidelity. So what they have in this index is companies that all pay relatively high dividends for their particular or their respective industries. So this gives you a great way to diversify your portfolio, but also create an income stream. So you have things like index fund and stocks that pay dividends. You have REITs, which are real estate investment trusts, which are legally required to pay dividends, right? So this is a great way for you to not only add investments to your portfolio, but it gives you a way to generate income as well. Now, dividends in the beginning don't seem like much, right? You're going to get paid maybe 10 cents here, $2 there, 80 cents here. It's not much in the beginning. But if you are going to do this consistently and kind of do the snowball effect where you're consistently investing in these assets, over time, that can definitely become a stable income stream for you. Now, when it comes to dividends, though, you do want to decide how you are going to handle them. You can either have those dividends reinvested, meaning when the dividend payment hits your account, your brokerage firm will automatically take those dividends and buy more shares of that investment, whether it's an index fund, stock, REIT, what have you. But you have to actually make that selection. It does not happen automatically on your behalf. So you'll have to log into your account. It's usually in the settings section. There's usually a place to manage your dividends or manage your stocks, and they will usually require you to turn on that feature. You can always turn it off as well, but if you want to have those dividends reinvested, you yourself have to make that selection and opt into it. Or your other option is to just have those dividends come into your account, and then you decide how that money is actually invested. Now, if you are someone who is not very active when it comes to your portfolio, you're not looking at it every day, you are not actively making selections on a regular basis, you have more of a passive approach, I would recommend having those dividends reinvested, so you know when that money comes into your account, it's actually going to go back into the market and be working for you versus just sitting there and not doing anything. Now, when I say that, meaning if you don't opt in to have your dividends reinvested and the money just goes into your account, it's going to sit in a cash holding account, which is going to earn you minimal returns, like minimal, like less than 1%, way below 1%. And it's really going to just be losing value if it's just sitting there. So you want to make sure that you are taking that money and doing something with it. Right? Ideally, you should be reinvesting it, whether it is in the initial or original asset, or you can take those funds and invest them in something else. It is totally up to you. But again, you want to make sure that money is working for you some way, somehow. Now, the next strategy that you can use as an investor is diversification. Now, this is one of those cliche terms that we hear a lot in the investment world. And while it is cliche, it is very relevant, right? You want to make sure that you are not putting your money all in one basket. And so when it comes to diversification, this means you are taking an active approach, to make sure that you are putting your eggs in multiple baskets. So one good example, I had a client of mine about 3 or 4 years ago, and we were talking about, what she invests in. And I realized that she was only investing in tech stocks. Tech. That's all she was doing. So that means like the Googles, your Facebooks, your Apples, your Teslas, and that was it. There was nothing else going into her portfolio because that is what her sole focus was. And the only reason why is she just believed that those companies were popular, they were doing well financially, and she just thought it was a great place to put her money. And not saying that those are not great places to put your money, but it shouldn't be the only place you're putting your money, right? So you definitely want to make sure that you are expanding your horizon when it comes to investing. Now, there are different ways to do that, of course. One, you can do an index fund that kind of puts you in different industries, helps you invest in different companies. That's always an option. But if you are someone who likes to invest in individual stocks, you want to make sure you are looking at other industries besides the popular ones, right? So you have things like healthcare, retail, tech, as we know, travel and leisure, energy, alternative energy, AI, right? So there's other industries you can consider, but you have to make sure you are paying attention to what you're investing in. And so if you have a 401k, you have an IRA, now is a great time to really take inventory to see what do you have in your portfolio. This kind of goes back to the 3 tips we just shared at the beginning of this conversation, meaning checking on your investments on a regular basis. And when you're doing that checking, understanding where your money is and where your money isn't is part of that checking process. So you can take inventory, and you might notice that you too tend to stick with certain industries or certain companies. And I think it comes down to a comfort thing. We tend to stick with the things that we know, and we tend to avoid things that we don't know. Whether it's because these are companies that you do business with, you shop with, they're just familiar to you. So that is kind of how you decide what you're investing in. So now's the time to kind of expand, right, your horizon to see, well, where am I not investing? And it might not be so obvious in the beginning, but as you start to really look at your portfolio and then just think about things around you, you might realize that, oh, I don't invest in the medical industry like at all. or I don't invest in energy at all. I don't invest in financial services at all. And it's not for any particular reason. It's just for the fact that you might be investing just in companies that you use every day, right? The Amazons, the Googles, the Facebooks, right? That's might be how you are choosing your investments. But again, now's the time to kind of expand your horizon and look at, well, what else can I invest in? And again, it doesn't have to be it doesn't have to be the main way you invest, right? You can say, I like tech, I like tech, I like tech, right? But you can say, well, let me kind of scale back a little bit. And instead of putting 100% of my future monies into tech, let me take 10% and invest it somewhere else, right? The whole idea about investing is a personal journey, and you have to be comfortable with the decisions that you are making. And so if tech is your thing because you know these companies inside and out, you know they're doing well, they give you a great ROI, that's fantastic. But the reason why diversification is so important is if the tech starts to have a tough time, right, and things start to go south a little bit, that means all of your money is going south versus having your money spread out in other places kind of gives you some hedge. So you're not taking a full loss. You might only take a minor loss, if that makes sense. So for example, if tech is down 20%, but medical is up 10%, right? You kind of now you're only down 10% versus being down 20%, right? In theory. So this is why diversification is so important. So really take some time to think about, well, first look at what you have and then decide where are you not and where do you want to be. I know for many people they want to invest in certain things and invest in certain companies, but the fear or just lack of knowledge kind of holds them back. But I will say when it comes to investing, you're never going to have all the answers. Never. I don't have all the answers. The fancy hedge fund managers don't have all the answers. I promise you, no one has all of the answers. But what we do have is our experience, our education, and our gut. And that probably sounds a little weird. Sometimes your gut kind of guides you as well as you start to do this more and more. So now you're going from making freestyle decisions versus to now making educated decisions. Now, an educated decision doesn't mean it's going to be the right one, but you have the why and you understand how you came to that conclusion. Unfortunately, most people kind of say, well, I don't know why I picked this. I just have it. Right. And that's the worst way to invest. And if that's how you've been investing, no worries. Now's the time to kind of take it from here to now you want to be here when it comes to how you approach investing. And that's really how I want all of us to approach investing. You want to get a little bit better each week, each month, each year. You don't have to tackle everything today or tomorrow and know all of the things. Just comes down to what can I do a little bit better next time. So next month I have to put money in my IRA. What can I do differently? Can I pick a different industry? Can I pick a different company? Can I do more research, right? And it just comes down to doing little things slowly but surely. And that's how you're going to make the progress in your investment journey. So the fourth strategy that you can use in your investment journey is called discount strategy. And this, well, I think between this and income, these are like my two favorites personally. So discount strategy means you're going to buy stocks at a discount. And I might say, Bella, well, how do I buy stocks at a discount? Great question. So when the stock market is taking a bit of a hit, that is when people tend to panic. People are worried about the money that they're losing. They're worried about losing more money. They might even sell because they're panicking. And right, it's like the sky is falling, the sky is falling. This is where you, as a savvy investor, say, oh my goodness, this is a Black Friday sale. What can I get on sale right now? And that is how I want you to approach investing going forward. You want to do the opposite of what everyone else is doing. So when everyone else is panicking, they're worrying, they're selling, you want to kind of be level-headed and say, okay, I get the market is down right now, but what can I buy at a great price? So for example, I'll give you a quick story. So back in 2020, when we were officially in the pandemic, right, the stock market was a mess. And the world was a mess, to be truthful, right? We didn't know what was happening or how long it was going to last, what was the future going to hold for how we operate day to day. It was really bad, right? If you know, you know. And so with the stock market, for example, we know the travel industry took a huge hit, huge hit, right? Everything, the world came to a stop. Nobody was flying, no one was traveling. And so many industries just started to tank, especially travel and leisure. So, Delta, for example, one of my favorite airlines, just FYI, their stock went from like $60 per share down to like 12 or $14 a share. And so for me, I was like, oh my goodness, this is great. Obviously, not great for what was happening at the time, but that was a great buying opportunity. And so my husband and I were having a conversation, and he was like, well, why would you invest in Delta right now? You don't know what's going to happen. And, this might be a while before things bounce back. And so for me, well, one, I'm more of a risk taker when it comes to investing, just FYI. And so I said to him, well, I personally like this for two reasons. One, I like the idea of getting a good sale, whether it's stock market or otherwise, right? And two, as someone who flies with Delta, I'm a very loyal Delta customer. I very much did like how the CEO handled the pandemic when it came to not only customers, but how they handle it when it came to their employees. And so for me, my thought process was, well, I believe that they will bounce back. When no one knows, truthfully, right? When we were in the pandemic, we had no idea how long things were going to be the way they were at the time. But I believe that at some point they would bounce back and they would navigate it like they always do. And so I am someone who follows Delta pretty closely. I listen to earnings calls, I watch the stock. And so, with all of that information, for me, I felt comfortable investing in them at that time. And of course, they did bounce back eventually. They went to their stock bounced back. They're now paying dividends again. So, right, all is well. Well, I shouldn't say that. They've had some issues in the last couple of weeks. But if we skip that, they've done really well, and now the stock is back up. And so for me, the pandemic was a great time to buy stocks on sale. And so you can use the same approach when it comes to how you invest, right? So you can watch certain stocks over a period of time, and you can wait to see if they dip in price, and that's a great time to buy. Um, so again, the biggest thing is not to panic. Now you want to think about, how can I be strategic when the market is down? Now, will the market always be down? No. But will the market always be up? No. Right. So the market has ebbs and flows, and that's one thing that comes with being an investor in any industry, whether it's stocks, real estate, what crypto. You're going to have ups, you're going to have downs. It really comes down to being in it for the long haul to see the ROI when it comes to your money. So let's just do a quick recap of the four strategies you can consider as an investor. So one, you have growth strategy, meaning you're going to invest in companies that you see great potential, you see that there's a great need or great demand for their product or service, so you believe that the company will thrive in the future. Next, you have income strategy, which just means you're investing in stocks that pay, well, stocks, index funds, or REITs that pay dividends. And ideally, you want to reinvest with dividends so your money can continue to make you more money. The third thing is diversification. So you want to make sure that you are well diversified in what you have in your portfolio. Either you're going to invest in different companies, or make sure you are invested in different industries. And you technically can do both as well. The last thing is going to be discount strategy. So you are going to buy stocks on sale when the market is down. And so you can use one, two, or all of these strategies all at the same time, but you don't want to overwhelm yourself either. So you may need to focus on one strategy for a period of time before you pivot to something else. But again, you want to make sure that you are being intentional with the decisions that you are making. We have to move away from freestyling it, which is how so many people are investing right now. They're kind of guessing, they're kind of winging it, and they're hoping for the best. Now, investing in itself is already great. You are ahead of most people. But we kind of want to go from just investing for the sake of investing to now being more intentional and putting purpose behind the choices that you are making. And you will find that once you become more intentional, you will see more than likely better results in your overall portfolio, because now you're making educated decisions versus just winging it and hoping for the best. So with that being said, I am hosting a 7-day investment challenge. It does start on March 31st. You can follow me on Instagram to learn more. I'll see if I can put information about the challenge in the caption when I post this video. But if not, definitely follow me on Instagram, as I am talking more about it over there, and you can sign up as well. Now, with this challenge, it's basically going to be 7 days of online lessons. So each day you will get a new lesson. And the goal of this challenge is to teach you more about investing in a way that is very simple and easy to understand. I know when it comes to investing, it feels so intimidating. It can feel very overwhelming also, but we want to kind of remove the overwhelm and kind of move forward to find a way to make investing more simple so it's less complicated. And more importantly, you're more inclined to keep investing, right? I found many people, they don't invest because they just don't know, they're confused, they're overwhelmed. And so if you remove all of those roadblocks, you can now move forward in your wealth building journey. And then at the end of the challenge, we will have a virtual VIP night, but we will all come together via Zoom or Google Meet, and it will be like a mini coaching session. So this will be a great time for you to ask any questions you have about investing. And most importantly, it's going to be a safe space to do that. I remember I had a client once who said, I am 40 something, I'm a whole grown adult, and I should know more about investing, and I don't. And I feel embarrassed, right? And I think that also tends to stop people from asking questions and just moving forward in general. And so this challenge is a great way for you to get more educated and overall feel more confident about your decisions going forward, because now you have the tools to help you understand what you're doing and also how to be more intentional with your future investing decisions. So I hope to see you in the challenge. Again, it does kick off March 31st. The last day to sign up is March 30th. And then we will have our virtual VIP night. I look forward to meeting all of you soon. So with that being said, I will see all of you guys next week. Take care.